What's going on, everybody? Back with another one. Hey, listen, man, the strategy that I've just started testing out is already working in my favor, and I can't wait to get cracking to it. So basically, I'm testing out a new strategy, especially since I've been at work more. I'm still scalping, but I'm not able to scalp as much because I'm not able to look at the charts that much. So what I usually do is I set up alerts on my phone, and then I wait for a price to get to where my alert has been set. And then once it's targeted, I look at my phone, I'm in there. So, this week I took in a lot of losses, but I also took in a lot of wins. So, because I've been kind of basically like scalping a lot this week, but I'm still up in profit, which is really great. And this right here is going to like literally like kill a lot of the just like the impatience, because as scalpers, sometimes we get impatient. We see this big move and takes off, and then sometimes we just want to catch that big move, get in and get out. But since I've been working a whole lot more, since I've been kind of like focused on my job, it's not like I can't do that, but I want to focus on a strategy to where like people who are working, they don't have the time to like look at the charts like that. Once price get to where it needs to, they can look at the phone every now and then, maybe like set an alert once price hit that alert, like, okay, cool. What's the market doing? And then all of a sudden, if it's going in the direction they want it to go, boom, you win, and just let it ride. So I wouldn't necessarily say this is like swing trading either. You can take this as the way you want it. So if you want to swing trade it, if you want to scalp it, if you want to day trade it, it's all up to you. And this is why I say, don't let anybody rock your hustle. I'm not a swing trader no more. I can't stand really swinging trades just because of the simple fact the market always wants to come back and hit you out. Or it's rarely that you ever see like the market like just continuously go in your direction. As far as swinging, and it just come back and just like break you out and break you even. So I got tired of that. Not saying I never profited from it, but it just, your trades, like, it takes longer to play out. And sometimes like you just never know how far the market will go. You just have to base it off of psychological levels and liquidity zones. So in this strategy, I call it, let me go ahead and put this down right quick. So in this strategy, I call it USD CHF and Euro Australian. This is Euro Australian. Now, technically what I usually do, I usually just trade gold and GJ. Okay, I usually trade gold and GJ and GU. I love these pairs, but honestly, when I kind of, when I honestly was kind of looking at the market, I started realizing like, oh man, like I'm not going to have time to like just continuously flip flop around these pairs all the time. So I was like, why not develop a strategy for you guys who are actually working as well? And you guys see that trade setups I send are winners, and I'm not taking my own trade setups because I'm just like focused on gold and GJ. I'm like sitting here like, man, I'm giving you guys like all these setups, and these setups are actually playing out, and I could be trading them too. So it kind of inspired me to say, you know what? Instead of just like sending out scalping, setups, let's also look at the market from like a bigger lens and just wait for price to get to a certain area. All right. So here we'll start on USD. That's USD CAD, USD CHF. Now I'm gonna go ahead and delete this stuff. All right. All right. Now, for a while, USD CHF has been on a big bull run. Okay. It's been on a big bull run, and based off the USD economy, there's people going back to work. You have the economy reopening again. You have the dollar recovering, but all honesty, the dollar is still not all that great. So technically, you still going to have a lot of bearish momentum in the market, and you're still going to have like these major pullbacks. So like we have this uptrend, go up, come back, forms a higher low and higher highs. Okay, market comes back, and just like I used to do like the trend line break. I don't do it anymore, but sometimes I'll slap a trend line on it. Market broke out, continue upwards. All right, came back here and it's dropped. Now I'm not going to say that when the market does that we're going to continue to see this bearish move, but I would say there is a ton of liquidity in this area. So, you know, the market might come back and just stop all these people out before shooting back up if the dollar, you know, continues to go up. So the way I caught this trade, I'm gonna go ahead and put it like this. The way we should catch this trade, all right? So I'm pretty sure this is from yesterday. So I wasn't technically looking at the market around this time, but here's how I would do it on this strategy. So all we looking for is high probability setups. So we're not looking for scalping methods. We're not sitting here trying to catch every bull run, every bearish run. What we're trying to do is we're trying to wait on our setup. As soon as our setup hits, we wait for confirmation we're getting. We don't trade M's, we don't trade W's. We wait for that confirmation to happen, and then we get in. And your stop loss is as big as you want it. I don't care if it's 60 pips, 70 pips, as long as you manage your risk, good. Because eventually, like, if the market goes in the direction that you want it to go, you're going to make your money. You could just take your own self out the market. You feel me? Like, you could just say, hey, you know, I'm going to put a 70 pip stop loss, but like, if you get around 30 pips, I'm going to take my own self out the market. Because I kind of realized, like, when you're looking at high probability setups, you really, really, really want to make sure that your stop loss is above structure. When you guys like put your stop loss nowhere above structure or below structure, the market tends to wick you out where most of the liquidity zones are. So like, you got to be very careful on how you place your stop losses on the strategy. It's very, 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 very simple. All right. So let's go here. I'm going to play. Let's replay. All right. So notice that the market was going up. All right. Now, instantly, the market has created a high. All right. So usually what I like to do is anytime the market creates a high, I'm pretty sure this was on Thursday, I like to mark that zone up, because 9 times out of 10, you know, people are going to say, you know, you see this double top, and then, you know, you just watch a tank, you know, instead of just, you know, yes, a double top, but instead of saying that, let's just say, hey, let the market come back and retest the high that is created. Because a lot of times, especially, you know, late during the you know, the week, if it's been on this bullish trend, you have all this liquidity, you know, down here. Okay, so you might, you know, the market within some time this week, you know, Thursday or Friday, will come back up, test that high possibly to grab the liquidity, and then, you know, plummet down. All right, so let's just say, okay, cool, you know, we got our the high today set up, you know, it's coming back to possibly retest. Do not trade this. I don't care if it plummets, do not trade it. Because what tends to happen a lot, guys, is this market would plummet and you guys would think it's like selling, and then all of a sudden it'll come back up, stop you out, and then like take off, you know? So let's see what we'll do in this case. All right, cool. Do know it was NFP. Speed this up a little bit. Let's move a little bit too slow. Okay, now NFP starts. The day of NFP, excuse me. So let me grab this and pull it out a little bit. Oh, shoot. Pull it out a little bit more. All right, so you have the high already tested. All right, again, it's 7 o'clock. All right, do we still sell here? No, we still don't sell here. All right, now, when I sell is when this candle closes. Jonah, why would you, you know, sell after this candle close? Well, remember, created a high right here. This high right here was tested, okay? And this candle right here is a big confirmation that it wants to sell. On top of that, it broke structure right here. And you want this candle to close. You don't want it to reject, okay, this area. So let's see what happens. All right, so this is, yeah, part of the NFP. I mean, 8 o'clock candle, basically, you know, NFP happened within that 8 o'clock candle, but you have retest right here. See, this is the reason why you put your stop loss above, because some of you guys will do this. Some of you guys will short right here, which is a good area to short, but you'll put your stop loss like right here. You know, I don't want to risk all this. You know, nah, go ahead, put your stop loss all the way above structure. Now, why am I saying your stop loss need to be above structure? That's that last area that is tested twice. Plus, this is giving you confirmation wants to go down. For all you break-even traders that want to say, oh man, 10, 20 pips in, I want to hurry up and put my stop loss and break even. Then look, candle came, wicked you out, and now it's going back in the other direction. You know, who knows what you might be doing for the rest of the day. You come back and like, oh crap, I got wicked out. So you got to be very mindful of that. All right. So I got in, it's on a 4-hour time frame, okay? And what I did, because I caught this late, so this bad boy came and broke this area, all right? Once this bad boy broke this area, actually, no, it didn't break it just yet, but because I saw the 4-hour bearish, instantly, guys, I sold. And I had my stop loss all the way up here, all right? Riding it down all the way to this next low right here. Now, this next low will give you about, let me see. Oh, yeah, 70-something pips. So right now, I'm still holding. I believe, that USD CHF is going to continue to plummet. Could be wrong. Oh, well, I'm at a good spot anyways right now. I took profit on, one of my other accounts. So, in this second account that I have, I'm just testing out this strategy and I'm holding it, So this is the next psychological level right here that's been, bouncing off of. And better yet, if you want to even, do like that. So this is like literally like 50, 60 pip moves, and you just call it a day. So that's why I'm just kind of like, trying to help you guys understand like how important like liquidity grab is. You can obviously see that this big bull run right here was going on for a very long time. Even down here. And, you see all this bearish confirmation on the 1 hour, and of course, the 4 hour as well. And price can just do this, and just create this, new bearish trend before, shooting back up, So that's how I caught USD CHF. Let me show you how I caught Euro Australian. It's the same way. Actually, see, this is what's crazy. I've been looking at this bad boy for the whole week. I put on my chart Tuesday. I said, okay, I'm just going to wait for this bad boy to come up to, the psychological level and just tank, right? So what happened is I went on the 4 hour and I was like, no, not the 4 hour. I went on the daily. I said, okay, what's going on a daily time frame? All right, what is like technically going on a daily time frame? And I remember marking this up right here. I marked these highs up right here back from February 1st, 2021. I realized that it's coming to these highs. What I started paying attention to is, these highs was hit, a good amount of times. And so I'm thinking, okay, there's two things that's going to happen. Is one, is going to plummet when it gets to this resistance level, or two, it's going to take off like crazy and just like grab all this liquidity that's up here, Well, obviously that did not happen. I started seeing on a 4 hour time frame, I started seeing a lot of like rejection around here. So I'm like, okay, now the market's coming back up. What is it going to do? I'm just going ahead and follow my rules, follow my strategy. If it rejects and then it just sends this bearish engulfing, I'm in the market. So sure enough, you see this bearish engulfing that took place right here. So I went down a 15-minute time frame because I like to catch my entries on a 15-minute time frame. And at the time, the market was like around here. And I saw this bad boy dipping. So I was like, okay, let me measure the stop loss because I know that this market is about to go. All right. So 36 pips, I say, I'll take it. So I went in the market, had my stop loss above right here. As soon as the NFP hit, NFP came and wicked up. See, this is the reason why you guys do not want to put your trade at break even too fast, especially during volatile news events. Technically, this should be right here because that's a level of structure that was broken in this area. If you can't see, I'll mark it up for you. So this level of structure right here that it was being trapped in it broke this level area up here. And usually what happens is when something that, when a level structure like that is broken, usually it comes back and retested and then drops. Well, sure enough, it came back and probably broke people out of break even, whatever you call it, wherever you put your stop loss, and then it just head on down, baby. So that's when I got in. Actually, I already got in early. I got on this candle and I just put my stop loss above here, and I knew I was good. Because here's the thing, once the market has grabbed its liquidity zones, it's gone. Okay, it's gone. The market doesn't have to, do this and then drop. It doesn't have to do that. As long as it's testing this area that I want to, actually tested it 3 times, and your stop loss is above, hey, you good. All right. So that's how I caught Euro Australian. Now, some of you guys are like, oh, what? How many pips are you up in? Okay, cool. Well, let's go ahead and find out. So right now I'm up 87 pips. Okay, I'm up 87 pips plus the spread. So probably technically I'm up, 60-something pips. The spread is like 3 pips. So I'm up 60-something pips right now, and I'm holding this trade. Now, where would I hold it? All right, I'll show you. I'll hold it down to this level right here. It only makes sense. Why? Because if you back up on a 4-hour time frame, you see this level being tested so many times, all right, in this area, so many times in this area. More than likely, it's probably going to come back down and just probably, continue to head and then probably pop right back up. So, hey, as long as the market is doing that, I'm going to be catching buys and sells all day on this pair. All right. So let's go ahead and look at another pair. Let's see, UJ. I'm going to give you guys this last one. So, for example, USD CAD was a perfect one. I don't trade USD CAD. I totally hate USD CAD. However, that does not mean that I would never trade USD CAD. It just might be sometimes I might look at USD CAD. I'm like, okay, I might trade it based off this probability setup. More than likely, I'm probably not going to trade just because I hate CAD pairs. I had this talk with a friend of mine, and we just absolutely hate CAD pairs because they just whipsaw too much. They act like they're going to go in one way, and then boom, But what I like about USD CAD, it does the same thing over and over again. Every time it bulls up, it drops like real hard. You just got to know how to catch it. All right. So, you know what? I don't know if I really want to do USD CAD as this. Let me, I think Euro NZD would be better. I saw something on Euro NZD. I think it's a better example. All right, so Euro and NZD. Let's go to the daily time frame. I always like to go to my daily time frame because I like to say, okay, what's going on during the daily? Like, what is the trend? What is it doing? I just trade what I see, guys. I don't trade, oh man, it's psychological levels. You see this big bull run, and then all of a sudden it has to do this and more. You see this downtrend, and it has to do this W. The market doesn't have to do nothing for you. The market is going to do what it's going to do. There's no right or wrong right or wrong way to trade, the way of the game. Like Forex is in a different wave. It's not like stocks. It's not like crypto. You have to trade what you see. You have to trade what it gives you. Okay. So if it's giving you bearish momentum, trade bearish. And then if it goes buy on you, okay, switch your buys and go buy. I don't understand why people make trading like super, super hard. Does that mean you have to be profitable in like a week or two? No. Like, this game is a process. Like you could get very lucky and just catch this, big daily candle right here and like, get rich off this candle. Like literally, like you're literally like risking your whole account and get rich off this candle. You can do that. However, like that doesn't mean that you can do that all the time. Some people just get lucky, some people get lucky. That's the way they trade. And there's nothing wrong with that. If you're a big risk taker, cool. But what I'm trying to tell you is like, I'm just trying to build consistency in your trading. You don't have to be where you're at right now, as long as you're building up. I'm not where I'm at, where I want to be at right now. I take losses just like everybody else. I've been greedy just like everybody else. I've been in different particular waves in the market, just like everybody else. I am building an account just like everybody else. Okay. So like, I don't care what everybody else is at. I don't care what people's opinions have of you. Oh, why aren't you here? Why aren't you there? You got this much in the account, blah, blah, blah. I don't care what people think. Okay. Because at the end of the day, Forex is not my full time. Forex is my, my side hustle. All right. That's how you got to look at it. You got to look at it like, okay, you know, I want to like be very, I want to be like very patient in this market and really understand the market. And the reason why a lot of you guys are blowing account because you don't know how to trade, and you're being very impatient. You're just taking setups after setups. And I tell you, man, like I'm a scalper, but when I scalp, I know my strategy. Like I know my confirmations. I know what the market tends to do before I take the trade, or I want the market to do something before I take the trade when I'm scalping. I don't just randomly say, oh, I see a bull candle like just gone, I'm just gonna take it. Or I see a bearish candle going, I'm just take it. Hey, you make your money like that, that's cool. But a lot of these folks don't understand the psychology of the market. Trust me. You'll ask them about what's the psychology of the market, why does the market move the way it moves, how many lots does like the hedge funds have to dump in order for the market to move. Like a lot of people don't know this stuff. Like they'll just say, oh, you know, I just trade the market, blah blah blah, and they don't even know how it moves, you know. There's a lot of people who make money in this market who are not educated, and you don't need a lot of education in this market. But what I'm trying to teach you is to be patient enough, especially if you work a lot and you're focused on other things, which should be, not just on Forex, and make this eventually become your full time once you get there. And you want to do it as a slow build up, okay? So we obviously see Euro NZD, you know, as this uptrend. So let's see if we can get a replay in. Well, let's go on the 4 hour time frame. Hold on for a second. Yeah, so there it is. So without looking at this, you know, obviously you can see the market has tested here plenty of times, okay? And you really want to look at where the market has been tested so many times, and then you want to look at, okay, what's the next move, all right? So let's go ahead and just like delete this trend line. We know it's an uptrend. Let's put the replay on. Go ahead and take this bad boy off right here. If you know it's an uptrend and everything, 9 times out of 10, you're like, okay, you know, cool. So what's the next step? All right, boom, easy. You know, the market's been, you know, trending in this area, you know, is technically on a daily have been ranging, but is in a range to where you can, you know, you can make a lot of money, you know, buying and selling this pair. Boom, boom. Oh, shoot. All right. You see, boom, 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 sell, buy, sell, buy, buy, sell. So you have, you know, let's see, about you got a range of like 200 and something pips of this pair going up and down for you. So what you really want to do is you want to pay attention to these levels first off, all right? Second off, you go on the 4 hour time frame, you're like, okay, how can I catch the next move? All right, well, simple, you know, we know that the market is in this area right here, all right? So let's go ahead and play. All right, so I'm not sure what's going to happen here because I didn't do any back testing on here, but let's just see. Okay, so let's pause this right quick. And let's just go ahead and delete this area right here. So right here, you see a level of structure being played out, okay? It came down and hit this area. What you might want to look for is you possibly want to look for another leg to the downside and it go up, okay? As soon as it go up, now remember, bear in mind, this is a 4 hour chart, so the pips are probably greater, yeah. So we probably want to look at a 1 hour, but the 4 hour did create a low. Come down to the 1 hour, well, it already broke out, so you might, you know, this trade might have left you already. But let's see what happens here. This is not originally what I want to show you. I'm just saying, just seeing like what would happen here. See if I can get an example out of this. Let's move a little faster. If it takes off, it takes off. Okay, so this is definitely not a trade you want to take. Okay, this is definitely not a trade you want to take because it never came back down and tested that area again. Okay, 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 okay. All right, okay, boom. Yeah, see, this is the reason why I don't trade Euro NZD. It's just super choppy and ranging. There's a lot of examples I can put right here, though. First off, tons of examples right here. All right. So you have this high right here that was tested in the first part. All right. Market came slowly down. All right. Now you could sell this area once it broke this area, just because of the simple fact, like it's still structured. The liquidity was grabbed, probably doesn't want to come up. So you could sell this, put your stop loss above here. And then what do we see after this low has been created? All right. We see their inverted head and shoulder. Okay. So technically, of course, you know, if you're trying to sell I'm gonna buy the inverted head and shoulder, wait for the bad boy to come back down. You see how this bad boy wicks, comes back down, starts rejection, stop loss right here, go ahead and buy it up, you know, and then boom, you know. So technically, you know, you could trade it that way. You don't have to wait for a W, of course. You can wait for your, you know, head and shoulders and inverted head and shoulders up here. Okay, cool. So why is this area right here so important? Because it's connected to this area as well. All right. So like I said, guys, anytime the market creates a high or it creates a low, you want it to come back and test it. Okay, cool. So it came back and test this area. Now it starts selling. Do we sell yet? No. Let's wait for this area again to be tested. All right. It comes back up, tests this area. What does it do? Boom. All right. It goes. All right. As soon as it goes, what do? We go ahead, mark this level up right here. Once this level break, as it already broke, go ahead, throw your position in, boom, stop loss above, right? Go ahead and write it down to the next low. Now, Jonah, I don't know where my take profit will be. Easy. Look, you know, the market been coming here time and time after again. So it's came here before. We're gonna trust that it's gonna come down there again. What does it do? It comes down to that level. You would have caught a good 50 pips. All right. Same here. All right. Let's go ahead and now, I would not catch a W here just because the simple fact it's in the middle of the market. Okay, so I will wait, like I said, to get to these like important highs and important lows of the market and then catch it again. All right, so let's stretch it on out. All right. So those are the examples I just wanted to show you. All right, let me see. All right, cool. Let's delete all this. So this is what we were looking for. Let's go ahead and just throw these session breaks. Also, if you guys want to throw session breaks are very, very, very helpful. Okay, cool. You know, so you have the high of Thursday happen right here. Anytime that usually happens, the market's probably not going to come back, you know, in this area once the Thursday tested the high Wednesday and just like completely like just plummets from here. So this example I told you, once again, we see this area create a high, it dumped, you know, okay, came back, tested this high again. What does it do? It completely dumps. All right, it creates this little mini M right here. But if your stop loss is above here, it's okay. Now, we don't enter at these highs. Remember, we're not sniping. We're not sniping the market. We're waiting for our confirmations. All right, Jones, so what happens after that? All right, I'll show you what happens after that. All right, so what you want to do is you want to create another level of structure right here. Why? Because, let me go ahead and take this out the way. There is structure right here trying to be broken. You know, when you trap the market like this, all right, and the market completely reverses on you like that and breaks this level structure, this is the area where you want to get in once it's broken. You can get on the retest, which is a lot more safer, or you could just go ahead and take this trade right here, put your stop loss above here. Now, I think that would be a very, very big stop loss. Yeah, 80-something pips. You can do that. Just make sure that you pay attention to the market. If it gets to a point you're not comfortable and where you're at, you know, on the drawdown, you know, go ahead and take your profit. I just say just put your stop loss above structure, so that way. Sorry guys, I went to bed late last night and still feeling it. And that way you don't get stopped out instantly. But the market came and did what? It perfectly came and tested this area. Now, when it plummeted, you could have put your stop loss right here if you want to, but like I said, put it above structure. All right. Plus, NFP came the next day. You know, once NFP happened, this happened, and then boom, it just drops. You know, and here's another level of structure if you wanted to get in on. You know, you could have rolled this one backward too. You know, another level of structure broken. And if you're this deep down, guys, just go ahead and put it on that last current candle. All right, right here above this candle. stick that broke in this next level structure. Let me see how many pips you would have been up. You would have been up 63 pips. All right. Now for me, I would have like probably, once this bad boy broke right here, I probably would have went on the 1 hour close retest. It perfectly retested. Put my stop loss right above here. Let it on ride. All right. Now, if I was going to like say, okay, that's TP1, then TP2 would be down here. All right. So I got big TPs. All right. So that would have been 58 pips, and then the second one would have been 128 pips. So this is the strategy that we're looking for, guys. We're looking for high probability setups, high probability trades, right? Same right here, all right? Guys, this stuff gets really simple. See, this is what happens when you wait. And then here's the other thing. Like, if the structure breaks and you're like, oh, man, I don't know if I should get in. Okay, if the structure breaks, put an alert on there, all right? Let's go to the 15-minute time frame. All right, 15-minute time frame. Structure, level structure breaks this area, all right? And then as soon as it breaks, you know, confirmation that both of these levels was tested. As soon as it breaks, all right, set your alert right here, especially if it's already taken. Don't worry about getting in just yet. Just set your alert, because more than likely it's going to pull back, test this area. What it did, more than likely came back, pulled it, tested that area, bing, bing, bing. You get your alert. Go ahead and once you see the first or second bearish candle happen, maybe you can wait for this bad boy to break, get in. And because you're right here and it tested that area of structure in the left view, you could put your stop loss right here. Okay, that's totally fine. All right, because that's still above structure. That is 15 pip stop loss. But if you want to be in safe side, put like 40 pip stop loss right here. And then you just ride it on down to this next level right here. Okay, let's see how many pips that would have been. All right. So that will be a 58 pip stop loss. You see, I'm just trying to make this super simple for you guys. So like, one thing that when you're really busy as a trader and you're trying to really, really, really like make something work for you, remember, you don't have to trade like everybody else. And that's the issue, man, that I cannot stand trading in this market. Is you run into people and they'll try to teach you how to trade, but they will make it like this the only way to trade. Okay, it's not. Been in academies where academies will say this is the only way to trade. No, it's not. It is not the only way to trade. Okay, there's people who are making buttloads of money swing trading. There's people who are making buttloads of money day trader, and there's people making buttloads of money, heck of a money, scalping the market. Okay, you just got to figure out what's best for you. And I think for me, this might start being great for me, especially since I work. Now, can I still scalp? Absolutely. Sometimes I just be chilling, look at my phone, I'm at work and I'm like, okay, cool. Let me look, go look at gold, did it break my level structure, and then sometimes my alerts will go off while I'm working. I look at the phone, I'm like, okay, cool. Get in, scalp it like, 20, 30 pips because, gold moves like crazy, take my profit and go. If I lose, okay, I'll wait for the next winner to come or next opportunity to come. Okay. And if you, this is what I would say. If you miss your trade, let it go. Don't chase it. Okay. Like, don't sit here and say, I got to have 150 pip stop loss to catch this trade. That's stupid. That's nonsense. Why would you catch the market all the way up here and all the way down here? Like, don't try to catch the market selling it down to hell and it's already in hell. Don't try to, catch the market in the sky if, your entry is going to end up being in the sky, but your stop loss all the way down the hell. Like, that makes no sense. That makes absolutely no sense. Catch it in a good position that gives you confirmation in your favor. All right. So, like I said, guys, this is the strategy that I just really wanted to show you guys that I'm going to be working on for the next couple of weeks. I'm not going to be doing this on Australian pairs, and I'm definitely not going to be doing this on NZD pairs. I hate those pairs. I don't trade those pairs. I'm just going to do it on major pairs. Euro Australian, and honestly, I'm not even sure about a lot of British pound pairs. I don't trust them as much as, you know, GJ and GU. I think if it's anything, it will be possibly GN, just because I like the reversal, or GA. But honestly, I think the way that these are setting up is better to use it on the majors, Euro Australian, especially Euro Australian, because Euro Australian is really good. It respects structure a lot, even though it's like choppy a little bit. It respects structure a lot, and when it reverses, it's gone. So, all right, I hope this video was great for you guys. And one thing I just want to say is, look, like, just be patient, okay? Stop trying to focus on everybody else. Stop trying to focus on everybody else's setup. Stop trying to focus on, you know, all these people who are flashy, post on Instagram, look how I made it, blah, blah, blah. Like, you don't want to be looking at that stuff. That is so, like, distracting. Who cares if they're rich? Who cares if they have money? Who cares if they have Lamborghinis and, you know, all this other stuff they're doing for people? Who cares if they're recruiting people? I don't care what they're doing. You know, you focus on you, because at the end of the day, when you make it, you'll be able to, like, show people and tell people, hey, let me show you how I do. See, like, the way I look at Forex, I don't look at Forex as a way of, like, oh, you know, get on his monies and start capping on social media. The way I look at Forex is like, hey, you know, use this as a side hustle to get to where you want to be in life, how you can serve others in life, how you can travel if you really desire to, how you could even be in a relationship where, you know, things won't be as, you know, hectic and heavy. Not saying like money is everything in a relationship, but, you know, money does help in a lot of ways. You know, it just, you know, and as me being a believer and a Christian, like, it just really helps where I want to be in life, where I want to serve, all the fun I want to do. But at the same time, like, you know, I don't think that, you know, we should be taking this money and just be, you know, clapping at people on social media. That's the issue. It's the reason why a lot of people blow accounts, because they base their goals on materialistic things. They're not basing their goals on discipline, character, helping others out, serving, you know, financial freedom. They don't look at it like that. They look at it as they're always perceiving it for themselves. And to be honest, I think that's a selfish view of, look, you focus on your goals, you focus on, you know, how you need to do this. All right. So I'll see you on the next one.